Welcome to the #InvestThis podcast, where the secrets for real estate investing are revealed. Now, here's your host, Scott Bauer.
Welcome, everybody, to the 54th episode of the #InvestThis podcast. I'm your host, Scott Bauer, and today we have a returning guest with us, Holly Williams. She was on episode number 29. Is coming back to talk about some real estate ideas. How you doing, Holly?
I'm doing great, Scott. Thank you. I'm out in LA in the sunshine, thank God.
So you're in LA. You're in a hotel room. The sun is shining. It is January 24th. Most of the country is freezing cold and covered in snow right now.
It was 10 degrees when I left New York.
Yeah, no, thank you. I'll take a hard pass on that. So why don't we refresh the listeners a little bit about what you're doing, kind of what your goals are or what you're striving to do. You have a pretty popular website out there that people can go to get some information on working with you. Why don't you give the listeners a little bit of an update?
So I think I spoke with you last time. I had just left my W-2 job or was about to. And, that sort of happened because it evolved and I became more passionate about real estate than I was about my job. So I've not missed it. The response has been overwhelming. I've been able to have a lot of conversations and get new investors and into my deals and our deals, from my colleagues, former colleagues and friends and all of that. So I'm sort of out of the closet and my goal really is to enable and give access to good investment opportunities to my friends and family and me, of course, because I believe that I found something rare and special that, my CPA couldn't tell me about because it's a private thing. You almost have to know somebody to get in one. So I want to make sure that people I love have access. And even
I want to talk about that because I think it's super important. These alternative investments, and we're just going to cut right to it. Multifamily apartment building investments are a phenomenal one that you're right. CPAs aren't going to tell you to go invest your money there because they're not going to make any money off of that. And your financial advisor is not going to tell you to go put your money there because they're not going to make any money off of that. Mm-hmm. But it is a safe, relatively safe type of investment that pays you in several different ways over time. Mm-hmm. And can create generational wealth for your family, can create a passive income that, you're not working in or working for, but your dollars are working for you. And it's so powerful. And it's a change that I'm making right now on where my focus is on a full-time basis. And to your point, when you started the call here, you quit your W-2 job and became passionate about real estate and specifically multifamily syndication or multifamily investment. So talk about that for a minute.
Well, I'm passionate because it changed my life by me investing on the limited partner side. So what I do is talk to people that tell them what I do, what I did to be able to replace basically my income. Over a period of about 5 years, I moved probably $500,000, probably $500,000. I'm 56 years old. I know I look 30, but I'm 56. And
you look great.
I know, thank you. And so I probably moved around 500,000. That was in mutual funds. I tell people that about the time I found out kind of that this opportunity exists, I got a $65,000 1099 that said, congratulations on your mutual fund. You've made $65,000, and you owe like 25 in capital gains tax. Right. And I'm like, you see, all my life, I did what everybody said to do. I put money in mutual funds and listed to the financial advisor. And when I get this 1099, I said, woo, you made $3,000. Woohoo. Oh, you made $10,000. Oh, you made $20,000. Oh my God. But when I made $65,000 and I had to write a check to the IRS and I didn't take any money out, I won't tell you what I said. I think I shared that in my last time with you, and the story hasn't changed. And except for now I can live on and support my family on my passive income I was working. And then what I've done is just invested $50,000, $100,000 in most of these deals and rolled them over when we liquidated them into 1031 exchanges. And it's been amazing. And I have single family homes also, because I started kind of the same, similar way, not in the extent that, but I knew about real estate, right? I just didn't know that you could invest in it without the hassle.
Yeah.
Right?
Yeah.
So now I find that the passive stuff offsets some of that income too. So I'm keeping more. I'm not making more. I'm actually making less, but I'm on paper a lot less, but I'm keeping more of my money. It's quite incredible.
So those of the listeners out there that maybe are thinking about or wondering what she's talking about, where you're making more, making less, but you're actually keeping more, it's because you're getting paid a couple of different ways. You're getting paid on cash flow that's coming in from the business or from the operation of the asset. You're getting paid because there is most likely appreciation within the asset. That can be forced appreciation based on renovations that you do to the units, which, yeah, when you say that, you can say the smallest little tweak can drastically increase your NOI or your net operating income, which therefore generates more money for you. But you're also getting depreciation of the asset. So you're also taking a percentage of the loss and depreciating the asset over, is it 37 and a half years? Is that right?
Right. And I understand, and all of this, guys, I'm not an accountant or a financial advisor. I have no, whatever. I have a business degree and, that's that. However, I do pay taxes and I've paid them for a long time. And so I have some good accountants now, but I believe, and I'm not sure, and a lot of accountants aren't even sure, that the new tax law is even more favorable than that. I think that you're able to we accelerate that depreciation anyway. You can accelerate it. There's a complicated formula that a CPA will know, but I believe that it got even better, and I'll find out when I go see my accountant very soon. But
yes. And you're right. I mean, with Trump's new laws and tax changes, it did become very lucrative for real estate owners and operators.
I've heard it's amazing. My accountant said, just keep doing what you're doing and we'll talk next year.
Yep. Absolutely. So, I guess I kind of want to talk about really what the benefits are, and then we'll move into what you're working on currently. What deals, what locations, why those locations, and why those types of deals.
Okay. Well, there's a couple of things. My background is market research. That's what I sold. It sounds boring, but it was really kind of interesting, right? Because it's about people, what people do, how people react to advertising, how people, what their behaviors are, where they shop, where they do this, and where they're moving and where they live, and what demographics are growing, and what advertisers need to target, and those sorts of things. And so one of the things that I do first is I study that, and where people are moving, where the population is. And I focus very narrowly on Class B, which means working Americans. So we go in and we make, just like you said, make little improvements. People will pay $100 for a covered parking spot. If you've got 400 units and, there's waiting lists in a lot of these apartments that'll, have a covered parking spot. So there's a lot of teeny things like that you can do. And there's a lot of efficiencies you can bring to the party if you know how to run an apartment complex, right?
Right.
So we do that, and we can make it a better place to live. That's the first thing. And so I focus on, I want to be in markets that are growing. So that pretty much knocks out most of the Northeast for me, where I live. Where I am right now, I'm in Los Angeles. It pretty much knocks out Los Angeles. I want to go where the working Americans are going, right? And they're going to Texas, they're going to South Carolina and North Carolina, they're going to Alabama, they're going to Arizona. Especially the retired people that want to get out of these tax hells, New York and California. So there's a lot of, they're going to some other places too. But I'm familiar. I grew up in Texas. I spent some time. I lived in North Carolina for about 3 years. So, you know, I know those markets a lot better than I know some other places. And so I've been focusing on those. And I think that the market is getting tighter. It's it is getting very tighter. And but I work with syndicators that have a lot of experience and have a lot of relationships. And a lot of times commercial real estate is based on that. So brokers, if they know you and they know that you'll close fast and they know that you're not like a jerk to work with, and they know that you're going to raise the money that you say you're going to raise, then they'll bring you listings before they offer them up. You know, so we're fortunate that I've been working with some experienced syndicators that have those relationships. We're still able to get good deals, and we're moving kind of in a lot of the tertiary markets. And I love like college towns like Knoxville. You know, Austin's not overrated, but oversaturated. But there's places like Lubbock that you wouldn't think about, but it's never had a recession almost because Texas Tech is there with 60,000 students. And so there's a lot of things that I'm looking at like that and my tenants, the tenants I want are hospital employees, maintenance people, maybe college professors, because they're, you know, that maybe don't have a lot of maybe not tenured and all the things that you do. Those sorts of jobs, people that run the school, you know, so it's those kinds of tenants that I look for, people that have jobs that are working with the Amazon, you know, factory or, you know, whatever, warehouse or whatever. And so working people, and it's an overlooked segment of the population.
Well, yeah. And I would add to that, you know, when you're talking about job diversification, going to areas that are growing from a GDP perspective and growing economy, growing population of people, but also jobs that aren't going away. I remember when I was in college, I was at the University of Iowa, and it was the very heart of the recession. I went in 2007 is when my freshman year, or 2008 was my freshman year of college. Okay. So 2008, 9, 10, and 11 was my college career, and that was the bottom of the barrel. Yet at the same time, at Iowa, you couldn't tell. I mean, everything was just business as usual.
That's right.
Right. And everybody was going into, you know, a lot of the students were going into deep debt because they have this college debt. But, you know, everything seemed to be working just fine. It wasn't, you know, I didn't feel the effects necessarily as somebody who was maybe working a job at the time or was, I don't know, lost everything, because that didn't happen to a lot of people.
Well, when people lost their homes, right, they stretch, right? So when people stretch, they move to Class A apartments and they buy homes that maybe they can't afford. And so what we do is try to get into, you know, Class B apartment rents went up in most of the country, and they stayed stable in some of the country, right? So you know, we try to go in with enough equity and be conservative enough where we, you know, if God forbid something happens, we could still get that cash flow.
So somebody that's trying to start out and they're like, you know what, I'm moving into multifamily full time and I want to do this full time, working with experienced people, coaches like, you know, similar coach that you and I both have, those types of people to get into deals. What if you want to be on the general partnership side and run the deal, but you don't have the wherewithal to necessarily do it all yourself? Talk about that. How does somebody get in?
You need to partner with someone, and you need to bring value to the table. Money raising is a good way to start. And as a matter of fact, now that you bring that up, I've had many people ask me to help them, right? Because it's harder than you think. I thought I was just going to raise $1 million. Listen to episode 29. I thought I was just going to go raise $1 million. I mean, I know all these people with money, but you see, people don't know about this. They've never heard of this. They think this is, even though, Holly, I trust you, but who are these people? And who, you know, there's a lot of comment, and I don't want to get in trouble with the IRS. What are you talking about? You know, and so you have to approach it very simply. Right. And all of those things will come out in time or whatever, not come out, but you know what I'm saying? So,
right. The truth comes out.
Well, I spent a lot of time answering questions that investors have, spending a lot of time communicating. And so there's a steep learning curve. So I'm considering taking on some mentees and having my own little coaching program. Got to get compensated for my time somehow, but
right.
I'm thinking that through right now. And you know, because some people just want to have a passive investment and not have anything to do with it, some or whatever, and some want to just refer you, and some want for you to teach them how to do it. And so there are different levels of that, because it's a team sport, man. There are different. I don't know anybody that can do this by themselves. They just go out and do all the thing by themselves. Everybody's got kind of talents on your team.
Yeah, I mean, who wants to do it by yourself anyways? I mean, this is something that's very fun to share in the profits. I mean, I guess the listeners out there that haven't listened to any other episodes on this podcast maybe don't know what syndication is. It's basically buying apartments with other investors, and everybody shares in the profit.
You're doing the same thing that a REIT is doing or whatever, only what you're doing is bypassing Wall Street, if you will. And we're doing it, with a group of experienced people, and we all have to know each other. You see, we can't advertise these things. It's secret. It's the law. It's a secret. And so once I discovered this club, I'm like, well, wait a minute. I've done well in my career. I have lots of other people that have done well in their career, and if you live in, there's an accredited investor thing. That's another topic. But, if you live in New York City and you live in anything but like a walk up with 3 roommates, you're probably an accredited investor, right? Because
it's just that expensive. It's just that.
Especially, if you're over 30 or 40 and so it's just kind of the way that goes. So people, but I was an accredited investor for years and years and years. I didn't know what that was. I never heard of it because no one had ever had an opportunity for me to invest in this kind of thing.
Yep. And for the listeners out there, so if you're making over $200,000 a year, if your net worth is $1 million, not including your personal residence, that makes you an accredited investor, right?
Right.
So those of you out there that might not know if that's you, that is you. Now,
there are some of these deals available to what they call sophisticated investors. Most of the deals are accredited. I deal with mostly accredited investors.
So I want to take another turn here. I know one of the largest places where wealth is being held today that is not being touched, and in a lot of cases is making zero return or very little return for people, is in their IRAs and their old 401ks. Mm-hmm. And a lot of people out there go to their CPA, or they go to their financial advisor who tells them to plug this money into stocks and bonds, mutual funds.
The only thing you can do if you don't know the secret.
Right, which is what we're talking about. Mm-hmm. But these, they don't even know that they're not making any money. So you can use your 401k, you can use your IRA to invest into these funds or into these apartment buildings and benefit from the tax incentive or tax benefits with it. And I mean, you never see the money. It doesn't ever leave your account. It's just growing tax-free in some situations, or, tax efficient, and makes a ton of sense. So,
and you don't even have to worry about rolling over anything or whatever. And so I invested in my first syndication with my IRA. So I knew the secret. I'd read Rich Dad, Poor Dad and everything. It takes a lot of courage to kind of pull that trigger, right?
Right.
And because you really don't know until you get into it almost. I mean, you do, but you don't. It's just like you don't know a stock either. You really don't intimately know the company that you're investing in, right? So there is a leap of faith in anything that you do, invest in at all. But what you can do is you can do what's called a self-directed IRA. Some people call it a checkbook IRA. And if you talk to your financial advisor, they'll tell you all the horrible ways you can get in trouble, or they just don't know about it.
Yep.
And if you say self-directed IRA to Fidelity, they'll put you in they'll say, oh, we have that. You can pick your stocks, or you can pick your mutual funds or whatever. So you have to work with companies that do. If you go to my website, I've got some stuff some information on there and some links and things to the people that did mine, but there are other companies that do it as well. But I've been real happy. I've had mine about 10 years. I love it because you know what? I'm smart enough to invest my money the way I think it should be invested because you can.
I'm into that. I mean, I'm into that really because, what I read or who I was talking to, I think it was yesterday, it's talking about you have to have a gut feeling about things and you got to follow your gut. Somebody can give you recommendations on where to put your money, but at the end of the day, it's your money. So you got to decide where it goes and you ultimately are responsible for what happens to that. Mm-hmm. So talk to the listeners about what could go wrong. How can you lose all your money in these deals?
So you can lose all your money if you work with a syndicator that is leveraged. So if you what I don't want to do is a short-term go in with 20%, 10% or whatever and buy some insurance or whatever and do some sort of flip, buy something that's not cash flowing. Leverage gets you in trouble because if the market goes down, you don't have room. This thing's not cash flowing and you don't have a lot of equity in it. And you've got bills to pay. You can't sit on it for very long. Right. So you run out of investor money. So that's one thing to look for. The next thing I think is the market for sure. You want to buy in the places that has a diversification of people. You want to also get a loan that is extendable, that it's not a temporary loan, that you have the opportunity to buy interest rate caps for. All that. You also want to raise enough capital we raise at least $250 a unit for an emergency fund, but we also raise most of the money, if not all, of what we need to do those renovations. So you've got wiggle room in there to do what's best for the investors, and I liked those that I have skin in the game. And I invest my personal money on the limited partner side. And so I think that's simple as well to have everybody have skin in the game.
Yep. I would agree because you can do this without any of your own money in the deal.
Right. And also I like those things that are structured in great favor to the investors. So, it doesn't go to 50-50 or anything like that until everybody's made a whole bunch of money. So we've hurdled some pretty high returns before that happens. And I like it in favor dramatically of the investor because that's important. As investors are golden. You want to make sure that capital preservation.
Absolutely. And you know what? you're just speaking Joe Fairless right now, right? So this, Joe Fairless is he's a coach for you as well, right?
He is.
And a friend and
he's a good friend.
But that's the right way to go. That's actively what we're looking for right now is a B class asset that's cash flowing today with upside. In a growing economy in a growing area with job diversification. I mean, that's really that's exactly what it is that I will be investing in and I already am, but that's what it is.
That's correct. And you have to really learn. I suggest reading Joe Fairless's book. If you haven't bought it, go buy it now. Don't even
his latest book. Well, both of his books, but his latest book.
But the latest one. He wrote a book on syndication and it's amazing. It still tell you everything you need to know, but doing it, you really need somebody. You need somebody that knows what they're doing, kind of to coach you through it, because there's a lot of things that nuances, and just like anything, right? Just like anything. So, and I still learn. I learned something today, actually.
Okay. Well, since you called that out, what is it that you learned today? If you could put it into a brief.
That there are some investors that you just should not work with. If they're concerned about the general partnership running off with the money, then it's not time for them to invest in this.
Another one of our
fire one here in a minute.
You're about to fire one?
Yeah. Mm-hmm.
So Trevor McGregor, when we were talking about raising funds, he said, finding the right investors is just like flipping over cards. You have a deck of 52 cards, and there are, what is it, 4 aces in that deck of 52 cards. So you flip over enough cards, eventually you're going to find those aces and the kings and the queens and the jacks. But you can ignore the rest of everybody else because they're not going to be a fit. And so that's a prime example of somebody that I wouldn't want to work with.
Right, and they might be a fit later, but I asked some advice of people too. I said, "How would you answer these questions?" And they said, "I wouldn't."
Push the next button. Next.
I answered them, and they said, "I can't even follow this." I mean, come back to me when you've got some, reasonable things to answer. And so my gut was correct. I checked it though.
So where, when we talk about markets, and everybody knows the market is up right now, it has been up and the economy has been strong, not in the stocks and bonds. If you're relying on that, you think the world's going to down under, but the market has been up in the real estate side. Things have been going good. Job growth has happened. We've had a lot of rent increases. Where do you see that we're going over the next 5 years? What do you see in the immediate 2019 and 2020? And I mean, where do you think things are going?
I think that a lot of markets are overheated, and it makes better sense to rent where you want to live and invest, where it makes sense and where you can get cash flow. I think that so New York, LA, the really big cities are being fueled right now by foreign investment. They are not an American person, unless they have a trust fund, right? Cannot get out of college and, like I did, and work for 2 years in a regular job and scrimp and save and buy a Manhattan apartment. You cannot do so when that starts happening, so what's happening is that a lot of people are moving to tertiary markets. And then if you tax them to death and you don't have a business friendly environment, businesses don't really move there unless you give them a ton of tax breaks, which, that's debatable too, because then the city doesn't have any money, and then you have to tax all the people that still live there to make up for the tax breaks. So you really have to follow that population. And I think that what goes up must come down. And if you look at 2008, the markets that we're in Class B apartments, people lost their homes, they moved in. Okay, we might not have been able to raise the rents, right? So that's why you underwrite conservatively, so that you can just collect what you've got and not just hang on to it and collect the money and keep making money while you hang on. Credit got tight, and so it was tougher to sell, and you really didn't want to sell. So I think you have to be in a position where you have that cash flow. If I'm buying for appreciation, I'm afraid to do that. I don't do that. I don't want to do that. I'm afraid of ground up construction, all of those things. Not that you can't make money, and I'm probably leaving tons of money on the table. I know people that are making tons of money doing it, but that's not my thing. So
yeah, I'd rather sleep well at night and buying in an emerging market or a growing economy, Class B affordable living that you've underwritten conservatively, that has upside if you do renovations to increase rents. But if it doesn't and the market falls out, you're still safe. That's how you're going to sleep well at night and return all the capital, preserve the capital of your investors so that everybody's happy. Nobody's angry. You're not losing money. You're just, because the markets go up and the markets go down, just like you just said.
It's going to go down. There's no question. I don't know when. Yep. I really don't. It could be tomorrow, but that's okay. I'm all right with it, because I may not make 30% returns, but I'm going to make good returns and I'm going to make income.
Yep.
You can't say that with the stock market. You're in big trouble if you need that money and it's down. You're in
Gosh, let's talk about, you can see it, feel it, touch it, all of the above. With a stock and a bond, you can't do that. You really actually have no control at all. It's just supply and demand that runs up price. And it's really, it's just it's an imaginary room where a stock goes up for sale and it's just the highest bidder makes it, buys it. but you have zero control about that in a nutshell. I mean, it's much more complex.
I'm in stocks but it's, and I've made money with stocks, but at the end of the day, I don't understand it as well as I understand real estate. Now, if you're a limited partner, you don't have a ton of control either, right? Because you're relying on that syndicator to make good decisions. Again, but that syndicator's in the boat with you, right? They're not making money if you're not making money. And so it's very different from a stockbroker that's just buying and selling what he paid for, right? Or his company wants him to push the mutual fund, that he wins. So it's not a bad thing. It's just my goals and my priorities are the same as my investors, and I am an investor. So that gives me a lot of peace at night, actually. And then, this is just what I know. I mean, I've gotten to know these people. I invest personally with them. I see how they work, see what kind of people they are. And, I want to work with like-minded people that put investors first and that, really want to do the right thing and help these communities too. I mean, we're giving people nicer places to live, and that's pretty cool.
Very, very cool. Absolutely. And I'm just thinking about this analogy here. Investing in as a limited partner with a syndicator is very similar to jumping out of an airplane tandem to somebody. Okay, right? When you're jumping out of an airplane tandem to somebody, you have trust that they're diving out of the airplane as well, and their life is at stake. They're going to pull that chute, and you're going to land safely. Now, could something happen? Of course something could happen. I don't know, both parachutes not open? Could that happen? Yes. But are the chances after hundreds or thousands of dives that they've had and, been approved to be able to jump tandem with you, you're probably feeling pretty good about jumping with them. The same thing goes with an experienced operator and syndicator like Joe Fairless and the team there. You're pretty confident that they're gonna get you to the finish line, or they're gonna be successful at this, right?
And that's a great analogy because I've jumped out of an airplane too, and I'm a big scuba diver. And here's the deal: you don't want to do anything that doesn't have a plan B and even a plan C, right? Yep. And you don't want to jump out of an airplane that you don't understand how it works. This guy that you're tandem to could pass out. I want a chance of finding the damn thing to pull so that we can live, right?
Right.
He has a heart attack. I want to know which lever to pull, right? And I want a redundant chute. And so the good syndicators plan for the tandem to have a heart attack so that everybody lives and does fine, right? And lives to jump again, right? And so that's what you want. So it's a great analogy. You want the spare air. If you're scuba diving, yep. You want to know the basics of what you pull and what you don't pull. If you want to get down safely, right? Or get up safely, whatever direction you're going. So.
Yeah. Now, real briefly, what market specifically are you looking in, and are you working on a project now?
So I work with experienced syndicators. So I find experienced syndicators, and I become part of their team after they get to know me and I get to know them. And so I'm working. I'm actually talking to a person at 1:00 today in LA about a project in Texas, and I'm finishing up a project in Las Colinas, Texas. And we have a little bit of equity left in that. And then we're looking in the Carolina, like I said, we're looking in all the places that, said it's harder to find deals now than it was. There are lots of people, entering the market that we buy these things from hedge funds, from families that want to get out and, retire or whatever. So it's harder to find deals. The interest rates, of course, are going up a little bit, but not really. I'm not too worried about it, actually, for the short term. For the long term, who knows? Can't plan on that.
I don't have a crystal ball, neither do you. And so we're just going with what today looks like, right?
what today looks like and have that plan B and C. And if anybody wants you to invest in something and can't tell you what the plan B and C are, run away.
Maybe run. Right. So, I mean, Holly, I appreciate you being on here today again and kind of going over, why multifamily is such a great investment for everybody out there. And it is the secret. You're living proof that it works. I'm living proof, although going to become more living proof, and it's becoming more of a larger focus for me now. I'm really excited about what the future holds in that aspect, and I'm excited. You shared a lot of wisdom, and hopefully the listeners listening to this also recognize what this opportunity is. And if they want to learn more, reach out to you, Holly. Reach out to me. I would love to educate as much as possible on why this is such an amazing opportunity.
Yes.
Why now is the time to get in. Don't wait, but why now is the time, because it's
market is I tell you what, one more thing. Bernie Madoff said this if you've watched the movies and stuff, Bernie Madoff said in the last movie, whatever it was, I don't remember, but he said, I ran a Ponzi scheme in the middle of the biggest Ponzi scheme in history. And I thought that was a very interesting line. So not that I'm in it, but I'm not really sure what I'm in. With an apartment complex, I'm sure about what I'm in.
Right. Yeah. I was going to say, you got to kind of elaborate on that a little bit, because I don't think the apartment complex is a Ponzi scheme at all.
Absolutely not. No. That's what I'm saying. I mean, that's what I'm saying. So I think of this as being 56 years old. I think of this as my retirement plan, right? I think of this as a way to get good, safe, reliable income and cash flow without having to touch the principal and leave that all to my daughter. With stocks, you have to sell the asset to make the money. So there are many different ways to do it.
An exciting asset class to be part of and to be in. And with that, I want to transition into our lightning round number 2 for you.
Oh, goodness.
Are you ready for it?
Yeah, I think so. Yeah.
Okay. So we kind of touched on this before the call, but if you were to, what is something that would be on your bucket list at this point?
So it's interesting because we mentioned scuba diving and planes and stuff. So all of that stuff, whitewater rafting and all that, I've kind of done. I still like to do it, and I would like to do more of it. But I got to tell you, this is my bucket list. I read Rich Dad, Poor Dad 20 years ago and never had the courage, because our brains we're given this blueprint on how you're supposed to live, right? And my blueprint did not include quitting my job and going and buying real estate, right? And so I'm sitting here in LA, and I'm not worried about having a conference call with my boss or whatever. And I'm not worried about, I'm having a great time. I'm talking about what I love, and I'm seeing people I like, and I'm, it's a beautiful thing. So it's not work.
Yeah. I mean, absolutely.
So that to me is my bucket. I'm living my bucket list. Seriously. I mean, I'm so fortunate. I've got healthy family. They let me do this, which is awesome. And it's good.
It's good. Sounds great. Do you have somebody that you admire greatly, and why do you admire them?
Oh God, I have so many people that I admire. I can't narrow it down to one person.
First person that comes to mind right now, boom. Who is it?
You've been talking about Joe Fairless. I mean, because he, obviously I knew him before he started doing real estate full time, and it's like I think he's a brilliant guy, and he's hardworking, and you are doing it. Dan Hanford's doing it. There's a lot of people. Trevor McGregor's doing it. It's like, and so I listen to these people, and I do what they do. I ask, how did you do this? And then I do the same thing. And I ask them, what would you do in this? Well, I wouldn't answer the questions. Good idea. Let's fire the investor. Right?
I mean, you're absolutely right. Thank you for the praise there. I mean, I mean, I admire Joe as well, to watch what he's been able to
we
do.
all admire, it's like we all bring different talents to the picture, and as a team, we can really lift each other up. It's really a wonderful place to be. So I'm living my bucket list.
So this goes along with the admiration, your bucket list, all the above. Do you have a lifelong dream, or are you living the lifelong dream right now?
My lifelong dream is, I'm a mom, and my lifelong dream is for my daughter to grow up healthy and happy and do good in the world, right? And so that's important. That's probably right now my lifelong dream, and live to see it, maybe, or at least part of it, right?
Yep, absolutely. That's a good little dream.
Yourself, you gotta, what we think and who we hang around with and what we do, makes a big impact. We're going through I'm going through a really difficult time with my daughter's school right now. I won't go into it, but it's hard. But I'm here by myself in the hotel room, and even I start spiraling downward thinking about this. We've all got problems, but, you got to hang around and be with people that make you better, right? And that are smarter than you. And
Absolutely. What challenges you?
I think just staying focused, right? There are many ways to do real estate, and a lot of people get very overwhelmed. And I really am clear on what I want to focus on right now. That could change. That doesn't mean that I can't learn about mobile homes. That doesn't mean I can't go look at a mobile home every now and then. But I'm not going to go get into mobile homes right now because I don't understand it enough to do that. And I don't want to be distracted because it's a different thing than Class B apartments. So I'm learning about things. I'm learning about node investing, but so staying focused though is to me is more difficult than anything.
I mean, that's spot on. Absolutely. Where focus goes, energy flows. The problem is, especially in today's world, we get pulled all over the place, right? Shiny object here and there and here and there, do this, do that. And people reaching out to you I get it. And so I think that's a challenge that challenges everybody, especially those that are, in this space, because there's so many ways to skin the cat, like you said.
Well, we have to focus on things that we can control and try very hard to drown out the rest of the noise. And it's tough because emotions get into it. We're human, right? But you have to keep that to a minimum and hang out with people that can keep you where you need to be going.
Yep, absolutely. On the straight and narrow. So one last one, and I think I know the answer based on your other answers, but what is your greatest achievement that you've had so far? And what is the greatest failure that you've had so far?
So my greatest achievement, my greatest achievement, I think, is so far so good with the kid, right?
Well, right.
But my greatest achievement in real estate, and the best real estate deal I had was my Manhattan apartment, right? So buying for appreciation. So there's nothing wrong with buying for appreciation, but I needed a place to live, right? So I didn't buy it on spec, right? And people kind of told me I was crazy then. So, but my biggest, the thing that I'm most proud of is just doing what I'm doing now and having the courage. People tell me, there are people my age that are like, so, look, in this, they come to me and they say, how the hell did you do this? And it's a beautiful thing. And I'm coming to people like Trevor and you and Joe, how the hell did you do this? So you get what you give, right?
Yeah, that's true. That's true. This has been a year that I've really started to see the reality of that. But anyways, what about failure? What is a great failure that you have had that has allowed you to fail forward and turn into an achievement, I guess?
My biggest failure, I think, is not what I did, but what I didn't do. Mm-hmm. And I think that my biggest failure is not believing in myself like I do now earlier in my life, right? we grow up in this school. You got to sit there and listen to what the teacher says, and you don't know anything. You start in this little, entry-level job, and you don't know anything. And so people tell you your whole life that you don't know anything.
True.
Tell you you're smart, but at the same time, they're like, you don't know anything. And just spending too much emphasis on what other people think. And I still get into that because it's programmed, right? Putting too much emphasis on, I was sort of a clawed and scratched my way to the middle. I mean, people think I was like this big advertising executive, it's just like, whatever. So, so I spent a lot of time and energy worrying about things that I still do. I have no control over. And so that's my biggest kind of failure. It's really what I didn't do, but you can fix those things, right? And I'm listening to that's my only people that are older than like 40 know this. My ringtone is urgent. Foreigner, it's urgent.
Oh, that's awesome. That's awesome.
Yeah, what can you say? The people my age laugh. Everyone else goes, "What is that? That's stupid."
Good stuff. Well, Holly, I'm like I said, I really appreciate you coming back on the show, talking about this in more detail. I'm psyched. I'm pumped up. I know you are as well. It's very apparent that you're passionate about this and that it's not going away.
Man, I appreciate you having me on. I love what you're doing. You're just, doing great, and you're a good guy. So, and that's really at the end of the day, that's what you want to be is bring good to the world, right? At the end of the day. That's it.
So thanks again. We'll make sure to include in the show notes how they can get in touch with you and as well to get in touch with me for all the listeners out there that want to learn more, get involved, whatever it might be. It's an exciting time out there, so make sure you take action. And Holly, we'll talk to you real soon.
Great. Thanks, Scott.
Okay. See ya. Bye-bye.
Make sure to like, subscribe, and share this podcast to help us spread the word. Go ahead and reach out to Scott Bauer on all the social media outlets for suggestions on topics and guests for the show. And check out investthispodcast.com for more secrets and resources to achieve real success in real estate.